Can we just kick off by talking about what the original plan was? Obviously, Keith Newmar, reasonably well-known guy, and you started off with a plan in mind. Is that still the plan, or have you had to evolve and change?
It's interesting. We hear a lot about that because the company was started in 2015, and originally the original game plan was they were going to consolidate a bunch of exploration projects in Mexico, greenfields exploration projects. But at the time, and we all remember how difficult the mining industry was in 2015, they looked around and said, we can spend $30 or $40 an ounce exploring to try and find ounces. But you look in the market and you can buy ounces for less than $10 an ounce in these really good projects that a lot of people had given up on. And so, they raised a bit of money and used this company, First Mining Gold, to start acquiring projects with the theory of being a land bank. So the original strategy was, we'll acquire it, we'll do just kind of minimal holding costs, the environment will get better, and then we'll be able to monetize these projects, retain interests, hold on to royalties, things like that. And so they're very aggressive in the acquisition phase and bought 8 companies or projects in 12 months from 2015 to about mid-2016. And that really gave us the portfolio that we have today. And people really kind of bought into this mineral bank concept, to the point that when they completed the last acquisition, the market cap of First Mining, with the exact same portfolio that we have today, was about 630 million Canadian. Today we're sitting, having raised a bit more money, having done 40,000 meters of infill drilling at Goldland, having done 2 PEAs at Springpole, a really transformational metallurgical program to, I think, unlock a bunch of the recoveries. And we're trading at 150 million Canadian market cap, 4 years later. So continues for us to, come to the point that we think that there is real value in this portfolio.
See, why I'm asking this question is I just want to get an idea of what's going on in the minds of the management team. So, I do remember that period, 2012 through to 15, people were coming to us about giving them money to do this land banking, not just mining, but also oil and gas. And it was not something, I guess we're a little bit more conventional and couldn't really sort of see the upside there. But some people were able to raise money. So you guys, that was the genesis of this. But you've had to pivot at some point. There was a realization that the market was not rewarding you as it once did. That must have been a big moment, big discussion.
Yeah, it was. And listen, that happened before I arrived. So it was really late 2017, as they finished up our previous PEA on Springpole, that they came to realize, we're sitting with this world-class asset and we're not getting the value that we think we can get from it. There's been an enormous amount of work done already at that point, de-risking it, that we've continued doing. But the only way that you're really going to surface the value from this project is to get it permitted. And it's because Springpole sits under the deposit, sits under the bay of a lake. And the development plan is building a couple of small cofferdams and dewatering a bay of this lake, which all the technical and environmental data that we've compiled over 8 years says is entirely possible. So that sort of, they embarked on a strategy then and really kind of changed the message. In some senses, maybe a little bit too aggressively, changed the message that we are going to build Springpole.
Okay, so look, before we get into Springpole, we do have time to talk about it. So let's park that for now. I'm just kind of coming back to that moment. So what do you know? I know you weren't there, but you've been brought in for, when did you arrive actually? Let's start with that.
So I started January 7th of last year. So I've been here just a little bit more than a year.
Okay, so in 17, they started seeing these changes in the markets. They knew they had to do something different to be able to raise capital, to be able to survive in what the market was doing then, which is not a whole bunch of nothing, right? So you're sitting on these cheap assets. So do you know what were the options available?
Well, I think at the time the options are do nothing, just kind of hold and wait for better environments. But the company had raised $27 million in 2016, and even going through the due diligence in acquiring the assets, there were sort of opportunities identified that, whether it's at Goldland, firming up the resource, or, hopefully adding to it. But certainly converting some of the inferred into indicated led to a 40,000 meter infill program that allowed us to really much better understand the deposit. And the company at the time was reasonably well funded to execute on a couple of these sizable plans. So they just kind of looked a little bit at the incremental risks and said, okay, well, we'll fund this program, we'll fund that program, just to try and answer some of the questions that investors and other potential partners would have about the project.
Yeah. Okay. So, the cash is also a big driver of that. Either access to it or whatever you had left after your the various programs, though. So, okay. Well, let's talk about you. So, why did they bring you on board? What were you going to do for them?
Yeah, so I mean, my background prior to joining First Mining, I was one of the 3 executive partners at a private equity fund called Pacific Road Capital, and we had $800 million under management in 2 funds, investing in largely late-stage mining projects around the world. And it actually at Pacific Road looked at most of the projects in the First Mining portfolio before they bought them. But I hadn't really spent a lot of time, looking at First Mining as it came together, because it was the whole mineral bank strategy, which I thought was kind of interesting, but it was pretty aggressively promoted at the time, and lots of momentum as they build up this portfolio. But it was targeted away from, not exactly targeted toward institution. It was really targeted towards more of a retail audience. And so someone had said to me in 2018, after I left Pacific Road, you should really look at, some of these assets in First Mining. And I said, oh, okay, I'll have a look. So I did, and sure enough, recognized we'd looked at Springpole in 2013. We looked at Goldlund twice, down to drill databases and block models, like at a pretty good understanding. And we couldn't get deals done in 2013, 2014, sort of as the market's rolling over and valuation expectations hadn't quite adjusted yet. But I really like these projects. And so, come late 2018, my predecessor had left as CEO of First Mining, and someone said, oh, maybe you should talk to Keith. So I more or less cold called Keith. I didn't know him very well. I'd met him a couple of times, and said, I think this is the most interesting portfolio of gold projects sitting in a development company in the sector. And I think as much as you need a CEO, part of what you need is someone to help you manage this portfolio. So that's kind of what I saw. And then I joined early 2019. The first thing that we did was look at, inside this portfolio, what are the best risk return investments you can make to surface the most value. And as you look at everything you could do to the assets in this portfolio, whether it's drilling, whether it's doing economic studies, the single biggest driver of value, if you believe that you can get a permit for Springpole, and we do, the single biggest driver of value is getting a permit for that.